don't save in dollars, you're going to go broke. And they mask how easy it is to determine that because we're told the dollar's only down 8% against the dollar index, a basket of crappy currencies. Measured against silver, it's down about 99%. And so when you talk about what is the better barometer, gold and silver are the barometers. Gold might be the best barometer, where the dollar's down 70+%, 75% against gold. Measuring against a basket of currencies, think of Triffin's dilemma, where every currency has to buy dollars in order to transact global business, at least for now, oil and whatnot. So all of these currencies sell their currency to buy ours, makes ours stronger in relation to theirs. That's why manufacturing flows to other countries. But same thing is true when you're measuring the value of the dollar against a basket of currencies that devalue their currency against ours. It's a stupid measuring stick.
In today's news recap, gold eases after divided Fed rate cut vote. Silver hits new high. Gold edged lower on Thursday as traders weighed the U.S. Federal Reserve's divided vote on a 0.25 percentage point interest rate cut, while silver climbed to yet another record high. It's just an overpositioning in gold in expectation of the rate cut, which did happen, and therefore you're seeing some selling pressure, said independent analyst Ross Norman, adding that gold's fundamentals remained intact. The Fed cut interest rates by 0.25 percentage point on Wednesday in a rare divided vote, but signaled a pause on further easing as officials look ahead to assess the direction of the job market and inflation that remains somewhat elevated. Projections issued after the two-day meeting showed most policymakers see just one rate cut in 2026. Fed Chair Jerome Powell offered no indication of when another cut might occur. U.S. President Donald Trump said on Wednesday that the Fed's rate cut could have been larger. Trump is set to announce the new Fed chair early next year, with White House economic advisor Kevin Hassett being a frontrunner. Investors are now looking out for November's non-farm payrolls and unemployment rate data due on December 16th for further clues on the Fed's next move. Spot silver to $62.09 per ounce after hitting a record high of $62.88 earlier in the session, bringing its year-to-date gain to 115% on strong industrial demand, declining inventories, and its addition to the U.S. critical minerals list. Silver's fundamentals remain incredibly positive. There is a phenomenal tailwind with the critical minerals list and the possibility that we might see some stock building, which would further increase market tightness, Norman added. Now smash the subscribe button, turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio so you do not have to rely on market commentators to stack efficiently. Let's get back into the episode.
Yeah, sometimes I ask myself, because, well, it's true. I ask myself, is it wise to say these things that I believe that kind of go dark, and people say, he's a blowhard, he talks. But it's nice. I mean, I started talking about this unit well over a year ago, maybe two, I don't remember, but talked a lot to you about it and all the shows that I did about it because it's not as prevalent in everything I talk about these days, but for a good 2-3 years, it was. I remember 2019, 2020, and I kept talking about the unit and the Belt Road and all this stuff. My wife said, you never stop talking about this. People are going to get annoyed. I said, but you don't understand. I'm the only one talking about it for the most part. And I see it so clearly. I believe it. I don't care. I'm going to stand out on the limb and say it. And it was cool to be right, to be proven at least the majority of what I said, a lot of it happened, and nothing ever happens the way we think it's going to, but variations of it. But the unit is something that I think is happening. And well, they just rolled out the beta test. But before I cover the unit, what I believe is the rails of the unit is exactly what China is doing to expand the internationalization of the digital yuan. Now, they're saying that not to piss off President Trump, period. And what is that internationalization? It is using the Shanghai Gold Exchange to build a series of multi-jurisdictional vaults throughout the Belt Road Initiative, starting in Hong Kong. What is the reason they chose Hong Kong first instead of Shanghai? Well, Shanghai was the only one. Next one is Hong Kong. Why would they do that? Because if gold comes out of China, it must go through Hong Kong to come out. Okay, cool. So the first trade they did, United Arab Emirates and China, the two of the four initial developers of the mBridge technology, which the unit will run across, which is a cross-border payment system that is not compatible with the SWIFT system. So there's no sanctions available there. And it settles in 7 seconds at a 98% reduction in fees. Now, the idea is right now, the way that it's set up before we talk about the unit, is that China can buy oil from United Arab Emirates, and they will pay for it in digital yuan. As of right now, the UAE could go to the Shanghai Exchange in Hong Kong and stand for delivery. China has made it immediately convertible into gold without having to switch to dollars first. So UAE says, I really like gold for that. So go ahead, give me your yuan. I'll switch it into gold immediately. Boom, done. These rails, these vaults will be built all throughout the Belt Road and Asia, Africa, South America. We already see vaults expanding in Singapore just built a new one, and St. Petersburg just built a new one. And of course, they're building a BRICS platform. And we have all of these vaults in the United Arab Emirates and in Brazil, all around the place that will have gold that are all connected to the same system. Well, this is the rails for the unit, as far as I'm concerned. And the unit would be best described as a settlement unit of account concept. So in other words, it's not a common currency, right? It is a settlement unit of account where it's a basket of 40% gold, deliverable to central banks if they need it or want it, and 60% BRICS plus currencies. And this is the currencies of the BRICS plus nations. They will need to maintain a strong monetary ecosystem. It benefits the countries themselves instead of benefiting the United States. That's number one. And if I want gold, well, I can stand for delivery. It is a wholesale settlement instrument, if you will, for governments and very, very large institutions. It is not a retail platform. That's BRICS Pay. And interestingly enough, BRICS Pay, which is B2B, business to business or business to consumer or bank to bank, small bank to small bank, is like a credit card system where if I live in Brazil and I'm going on a trip to UAE, I can just pay on my BRICS Pay app and bang, it's instantly done instead of having to convert and do all of this stuff. But I listened to an interview by the guy who developed, and he said, we are right now in negotiations in China right now to roll this out to the Belt Road Initiative. That's what they're going to do with the mBridge or the unit, where you're opening up to 75% of human population, 150 countries, not just the BRICS nations. And this is the part that the naysayers and the poo-pooers have missed continuously.
In today's news recap, Americans barely own gold. That means prices could climb even further, Goldman says. Gold's record rally this year has grabbed headlines, but American investors barely own any of it, which means the yellow metal's price could have more room to run, according to Goldman Sachs. Even with gold hitting repeated highs, U.S. ownership hasn't budged much. Gold ETF exposure is still 6 basis points or 0.06 percentage points below its 2012 peak since the launch of gold ETFs in the mid-2000s, according to Goldman's analysis published on Wednesday. The low gold allocation is simply because portfolio growth has outpaced gains in gold prices and volumes over the past decade, Goldman's analysts wrote. And while gold has surged to new all-time highs in 2025, Goldman's analysis shows that the rally hasn't translated into meaningful increases in actual U.S. ownership. Gold ETFs make up just 0.17% of private U.S. financial portfolios as of the second quarter, a microscopic slice of the roughly $112 trillion Americans hold in stocks and bonds, according to Goldman's analysis. Goldman's data also shows that fewer than half of large U.S. institutions managing over $100 million hold any gold ETF position at all. Among those that do, allocations typically sit between 0.1% and 0.5%. For major long-term investors, only about 0.2% of their portfolios are in gold. Despite the social media buzz around Costco gold bars and U.S. mint coin sales, the report notes that physical gold demand in the U.S. is tiny compared with ETF flows, just 11 to 15 metric tons year to date versus roughly 400 tons of net ETF buying. That low ownership stands in sharp contrast to recommendations coming from major market voices, including Citi, UBS, Morgan Stanley, BlackRock, and Bridgewater founder Ray Dalio, advising investors to add gold to their portfolios. The gap between those recommendations and reality is exactly what Goldman says could push gold's next leg higher. Now, smash the subscribe button, turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio so you do not have to rely on market commentators to stack efficiently. Let's get back into the episode.
Sergei Lavrov came out and said, no, we're opening this up to everyone in the world except the the United Nations, the United States, the European Union, and Great Britain. They can't use it, but the rest of the world can. And so it is a basket-backed collateral anchored system, token, used to settle trade invoices. The key of it that I don't think I talked enough about, but that really makes sense to me, is that the unit will make measures the BRICS plus currencies in gold terms instead of you're measuring gold in currency terms the way it is now, where you measure it in dollars. All of these currencies, their value will be measured against gold. Gold is the reference in all of this. That is the important part to remember, is that gold is the reference in all of this. And in essence, what it's going to be able to do is allow countries to trade with other countries using this settlement vehicle, which allows for immediate delivery in gold. And all of it will challenge the hegemony of the West, because sales or transactions will chip away at the transactional status of the dollar, devaluing it. And ultimately, gold being the anchor to all of this, which has destroyed the performance of the 10-year Treasury without any counterparty risk, will start to massively chip away at the reserve status of the Treasury and of the dollar. So the bottom line here is that it's in beta testing right now. So the claim that it had been launched successfully, it's been launched, but in a beta test. One last point I'd like to make about it. You didn't hear about this until here it is, right? Why? Because the United Arab Emirates, China, Hong Kong, Thailand developed the program. Shortly thereafter, Saudi Arabia wasn't involved in the initial development, but they came on as the fifth, and they're a big one, right? The largest oil producer, OPEC, they came on as the fifth participant in Enbridge. Think about that for a moment. Cross-border settlement for things like oil, and Saudi Arabia is the fifth primary member. Now, all of this, is just for a refresher, people don't know this, was developed in concert with the Bank of International Settlements Innovation Hub. I remember before Michelle McCory worked for me, I was doing an interview with her on Kiko, and she said, well, I said this to Andy, isn't that a Western institution? I said, you know what? You're right. Ding, 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 ding. I don't know why I didn't really think about that. And she's like, couldn't they perhaps have other interests or something? And I'm like, yeah, you're right. Almost immediately after that, the UAE pulled out. The Bank UAE, got too many acronyms going through my head. The BIS pulled out at the 12th hour, right when they were going to make it go live at their meeting in Novigrad. And they said, we can't be involved in any transaction, even though they've been doing this for 4 years, developing it with these people. Well, we can't be involved in any program that would allow any country to sidestep Western sanctions, acting as though they just realized that Russia was the R in BRICS. So that really got the BRICS countries mad, in particular China, very mad. And that's why it's gone dark. You don't hear a lot about it anymore. Now, we knew that they were still working on the bridge technology. And we've talked about it a little bit on your show here, how they've already connected with the countries in Southeast Asia, the Asian countries that are 800 million people, twice the population of the U.S., the largest trading partner of China by far, not the U.S., those countries in Southeast Asia. And now they have the ability to go back and forth with central bank digital currencies, or ultimately the unit, free from Western interference, settle in 7 seconds, no intermediary banks in New York, no sanctions. It's happening. And it's happening now in a much faster way where they're actually testing the unit. Now, they never tested the unit before. It was just cross-border currencies. And I've been consistent with you saying, yeah, this is the rails of the unit. Now, they've gone quiet because what the BIS did at the 12th hour, in my mind, is James Bond espionage. They infiltrated. They said, yeah, we're here to help you. We'll integrate this new system to the West. And then bang, they pull it at the 13th hour, 12th hour. We're out, and they back out. So this is, in essence, because the Chinese pretty much developed it, this is going to continue to progress, but maybe not with the transparency and seeing how it all unfolds in real time as we would like. We just found out that the beta test happened. Okay, here we go. So I guess we'll see in 2026 how that rolls out and continues to develop. But I expect it to be a something that really, really, really catches the eye of the West. They're not going to go down easy, but this is something, this is something to definitely not underestimate. And even JP Morgan came out and said, I don't know exactly what they said, but it was pretty much like, yeah, this is actually very legitimate. And it's the most legitimate challenge to the dollar that we've ever seen, more or less is what they said. So here we go.
Do you agree with him? Are you still bullish in gold and silver? Is a massive collapse going to happen in 2026? Post in the comment section down below your honest opinion. Subscribe if you have not yet done so. And watch this video right here because it's a perfect fit for you. I'll see you on the other side.